you are a swing trader, a day trader, a long-term investor, if you are trading stocks, then there are 3 time frames that you need to watch. The first is going to be the monthly time frame, and the reason why, this is going to let you know where your stock is in the overall move that it's going to make. Has it been running for several months, several years? What percentage is it up over that period of time? It's going to let you know when the major players of the world, the major hedge funds, mutual funds, pension funds of the world, how long they've been in this trade and when they might start to sell, with a long-term capital gain. If this thing has been running for a year and you see that it's up 100, 200%, it might start to stall out because now a lot of those players have long-term capital gains and they'll be able to sell and have a little bit of a tax advantage in doing so. So just something that you want to be aware of. I would call the monthly charts akin to, like, if we're looking at seasons and we're looking at the forest, this would be looking at the overall forest, and you would know if you are in winter, if all the leaves are already off the trees, maybe there's some snow on the ground, it's cold outside. That's how you're going to know if it's winter. If there's leaves everywhere and it's nice and it's sunny, maybe you're in spring, maybe you're in summer. But it's looking at that bigger picture. That is the monthly charts. Next time frame, going to be looking at the weekly charts. This is where you're going to find many of your intermediate term setups, and that's going to be important. Again, if you are a swing trader, day trader, anything in between, and the reason why is because even if you were a day trader, right? So I do both. I do both swing trading and I do day trading, and the reason why I'm still looking at weekly charts for day trades is because if a stock is trading sideways and it's still in a weekly consolidation, I won't look at those for day trades. I want my day trades to already be extended where you wouldn't touch them as a swing trade because it's just too far extended. For a day trade, you want them to already have that upward momentum, that thrust. Like if you're thinking of a rocket ship, you want it to already be out past the atmosphere and into space where there's not all that resistance. It's already gotten that thrust. That thrust is going to come primarily from the weekly charts. So you want to take those into account too. And if we're looking at that analogy from earlier, the forest, these are going to be the trees. And it's important, right? Like that's where you would start to see some of the earlier signs of change, where you're looking at a tree, there's no leaves on this tree. You wouldn't immediately leap and say, oh, well, winter is here, because it might just be one tree that's dead, right? Like you would go and look at everything else around you, and you would be a little bit earlier if you start to see this tree is losing all of its leaves, maybe that one is, there's a few that still have it on. It's getting you into the game earlier, starting to see the trend change. Finally, the third time frame is going to be your daily time frames, and again, very similar to the weekly. That's where a lot of your execution is going to happen. If you are a swing trader, even if you're a little bit longer term, some of your execution might happen down on the daily. You'll start to see some of the patterns begin to emerge and some of those advanced entry points happen down on the daily chart rather than waiting for a weekly bar, right? Like let's say you're a long-term investor, right? A long-term guy, and you have price that's coming right into the 200-day moving average, and it bounces and then rallies, closes at the top of its range, and it bounces off of there, and at the end of the week it's up, say, 15%. Well, if you were paying attention to the daily chart and you saw it kiss the 200-day moving average down on the daily, you'd be able to get in at a super low risk point and have so much more reward. So keeping an eye on all those different time frames is going to help you quite a bit. The daily time frame would be akin to looking at a leaf in the forest. And while it's going to be the first sign of change that you're going to see, you wouldn't only focus on the daily time frame and declare that winter is here, right? It just might be one dead leaf on the floor and there's green trees all around, or maybe there's one leaf on the ground and one dead tree and everything else is green. You need to take in everything into account. That's going to give you a holistic picture. Now, these are the three main time frames that you're going to look at for all stock trades. I want to hear what other time frames you might be looking at. Drop it down below. Let me know if there's anything else that you're looking at on your trades as far as time frame analysis, or if you're trading something else too. If you're trading forex, if you're trading cryptocurrencies, well, whatever it is that you're trading, what time frames are you looking at? Let me know down in the comments. If you enjoyed this video, give it a thumbs up. And thank you for watching all the way through. Hit that subscribe button and make sure that you're sharing this video with other people that you think can get some value from it. Thanks so much for watching, and I'll see you again in the next video. Take care. Peace out.